Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, November 14th. Greetings from the Big Island, or I should say aloha from the Big Island in Hawaii. In the NASDAQ market, we did get some movement to the upside. I was looking for unchanged to higher. Was not expecting this much volatility. I felt that would come Thursday and Friday of this week, as I mentioned to you before. We did see a little bit of buying coming in here. It's a step in the right direction. However, the next 2 days, and it's not so much Thursday now, but it's going to be the pressures on Friday in terms of how it performs. I think that will give us additional insight into this market as I talked about in the advanced video. But let's move on and let's take a look at what's going on with the euro. The euro, I was looking for unchanged to higher. It gave us that type of behavior. Here's yesterday's action. And I'm looking for more of the same. Again, we're running out of time with this euro. As you know, I've been bullish on this. But it's going to have to get up and get going here within the next 4 sessions. If it doesn't, not a good sign for a continuation. In the Swissy, by the way, it did trade above this bullish level. The difference between the bearish and bullish level in that particular market is 206. No, it's not. It is 165 ticks, and that's $2,662.50 per contract. That would be the dollar value of that change. And again, I'm just giving you that as a reference. For example, down here in the Aussie dollar, the difference between the bearish level and the bullish level, as you can see, the market did move above that level. That would be 320 ticks, which would be $3,200 per contract. And again, just to give you a feel for that change, here in the British pound, this difference in that market is 100 ticks. Is the difference between the bearish level and bullish level, and in that market that would be $625. But let's move on. Let's take a look at those interest rates. And in the interest rate markets, the market also traded above that bullish level. The difference here between the bearish and bullish level in the treasury notes in that market is 13 ticks, and that would be $406.25. It's $31.25 per tick. That'll give you an idea of what that magnitude of change is. Let's move on though, and let's take a look at gold. I'm looking for a sideways market here. I'm not looking for a continuation up there. Gold actually did firm up a bit, and I am looking for it to get stronger. This difference between the bearish and bullish level in that particular market is $37, and that would be $3,700 per tick. Per contract would be the value of that change. And we're looking for movement to the upside today in the gold market. Now, when it comes to crude oil, I'm looking for a sideways move. And when it comes to soybeans, we were looking for a rest day. It gave us that yesterday. We're seeing some weakness in Asia right now in that trading. And I'm looking for a market to go slightly lower and sideways. That's my conclusion today for market studies. Thank you for being with me, and I'm looking forward to being with you again. In the meantime, take care.